Hello, and welcome to the stockholders presentation. I would tell you that this will be an exciting, entertaining, amusing event, but it's not. I'll try to keep it as light as possible, and hopefully you guys will really learn some good information as we go through this. First of all, what is a stockholder and why do they need a presentation? Well, when you buy stock, you become owner of a company. Now, that doesn't mean that you go in and tell the company how to run. You are investing in that company, and because of your investment, you get an ownership stake or a share of stock. But if you're investing and owning a company, there is something you want. You're not just giving them your money for fun. So what are you hoping for? You're hoping for some type of return on your investment. And who is responsible for running the company that you have ownership in and running it in such a way that there are profits so that dividends, return on your investments, can be paid? The management team. And what are all of you? The management team. So it is your job once a year to meet with the stockholders and explain to them the current financial position of the company and the company's plans for the future. That's what a true stockholders meeting is. You're going in and you're telling the story of what you've been doing with that company for the last year. That's all it is. It's story time. And if you think of it in those terms, it's not quite as frightening. And just like stories are written using different words depending on the audience, children, adults, teens, when presenting to the stockholders, you will want to use the language of business. Now, for our purposes, of course, we're not going to have real stockholders here. We're going to have judges, and they're going to be listening for a few other things as you tell your story. They're going to want to see what you've learned during this week. How familiar are you with the financials? All of those things that you see on the screen behind me. That's what they're interested in. But the way you will tell them those things is by telling the story of your company. Where are we having the presentation? Well, we're flying you all to New York City and we'll be meeting in the Hilton Business Center. Okay, maybe not. We will be using 2 rooms right down the hallway past the PFEW offices. The rooms are classrooms. Along one wall will be a long table with chairs for the stockholders, also known as judges. And on the other side will be chairs for your team and a podium for you to use as you're doing your presentation. The team will go in and have time for a setup, 3 to 5 minutes maybe because of the way we alternate classrooms, and then have 12 minutes for story time. During that time, that 12 minutes, you will need to complete some mandatory tasks. First, someone will hand the judges a copy of the Year 3 Fourth Quarter Decision Input Sheet. Now, you guys just did a decision in your rooms, in your company rooms. Do you remember that decision input form that you had to run downstairs and give to the CAs, monitors? Yes, to the monitors. You'll have 2 of those for this very last quarter. You will take one downstairs and turn it in, and you will keep one to turn in to the judges. That's important. Then the group will present their financial statements. And during the presentation, they will also talk about what they've done and analyze what they've done. The most important part of the presentation is the data. The second most important item is time. How many minutes do you have? Yes, let's think about this. You are to use 12 minutes and leave 2 minutes for questions. So that means you have 10 minutes for your presentation. What happens if you use 13 and a half minutes? Well, they'll stop you before you get there. What happens if you only use 11 and a half minutes? You only have 30 seconds left for questions. You're not going to get that. What happens if you only use 6 minutes? Do you really want to answer questions for 6 minutes? How can you determine if your timing is correct? Practice. Practice, 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 practice all the time. And one other thing, you can only use materials provided to you by PFEW. We'll get into this more as you hear other presentations. This is the required content. You may have more, but not less. Do you remember from earlier today and from your practice quarter the names of the financial statements? Story time. That's the management discussion and analysis. What you did, and most important, why did you do that? And what were the results of what you did? That's all telling a story is. What we did, why we did it, and what happened. You guys, I'm sure, are very good at telling stories. I'm sure you've had to tell them to your parents when you got in late or scratched the car. What you did, why you did it, what was the result. You can do this. There are 2 required financial statements: the statement of income and profits retained and the balance sheet. We're going to do comparisons one year to the other. Your quarterly report. Do you remember that quarter 0 report that you had, that you started from when you did your practice round today? Look at that. There is a 3rd financial statement on that report. Can you determine what it is, what it means, and how it might be used? It's great for fill time when you're talking to the judges. We are now descending into Nerdville. For those of you that aren't nerds, I'm sorry, but here we go. An accounting period is generally recognized as a 12-month period of time, with ending financial statements prepared, which are used to report to stockholders and to prepare tax returns. During that 12-month period, most companies will require interim financials. I mean, think about it. If you waited until the end of the year to look at a financial statement, would you really be able to effectively manage your company? So how often are your companies preparing financials? That's correct, quarterly. Now, if we are going to compare one year to the prior year, what will we need to do? Well, you've got financials that are quarters. Look again at that report for quarter 0, your starting position. That is for a 3-month time period. A quarter is 3 months of the year. Each income and expense analysis is for 1 quarter. So to have the information for 1 year, you will need to pull the information from 4 quarters into 1 income statement. Each income statement on each of the quarterly reports stands alone. An income statement is a report about the operations of your company for a specific period of time. January 1st to March 31st, April 1st to June 30th, a specific period of time. When you look at the June 30th quarterly report, the second quarter report, it doesn't include the first quarter. So we're going to have to pull those all into 1 year and then the second year into 1 year so that we can do a comparison. Then we'll be able to look at annual income and expenses, annual profit. We can compare. Are the sales up or down? If so, why? What did you do? What happened? Did any expense change significantly? This is how we begin to pull the information that you need for the presentation. And if every time you get your quarterly reports, you sit down and you analyze it. When you do your decision, you're doing, this is what we're doing and why we're doing it. When you get your report back, you're doing, and this is the result. You'll have everything you need to tell the story when the time comes. The what, the why, and the result. I'm sorry, I just hit the wrong button. This is an example of a comparison statement of income and profits retained. This is how the 2-year comparison will look. Exactly like this. Same format, same columns, same heading. Only, of course, with your company name there, not Widget Manufacturing. And the amounts from your financial statements. Notice the percentage of change column. It is easier to determine what accounts or categories had significant changes, sometimes with percentages than with dollar figures. Sometimes only reviewing dollar figures can be deceiving. What information is on this? What does this tell you? As I said, it reflects the results of the company's operations, doing what you're in business to do. Take time to look at the cash analysis forecast. Do you remember that? That's the one you filled out before you filled out your decision. And figure out what information from that data input sheet is part of this profit and loss. That's another name for statement of income and profits retained. What does this input sheet actually tell you? The title might be a hint. Does the data guarantee a profit on your income and expense analysis? These are things to look at and think about. See if you can find the relationships. If you can, telling the story will be much easier. You're going to use large sheets of newsprint to prepare the financials, about the length of an average person with their arms raised. The print should be 2 to 3 inches in height. Only black markers should be used. No colors. This is about utility, not beauty. So all you creative people, this is not the place to make fancy letters and numbers. This is an example of your quarterly report. The income and expense analysis, this is what we've been talking about, is for 1 quarter only. You can find this on each of your reports. And you're going to add together 4 quarters to get to 1 year. Now, make sure your math is correct. You are adding 4 columns of numbers for each year. The math is important. Do you know how easy it is to mess up the columns? Well, with that in mind, because it's so important, and you're already under enough pressure, we tried to make this part just a little bit easier for you. Your CA has access to spreadsheets that will make the addition a breeze, and the format and appearance of your final product perfect. Each time you receive your quarterly report, someone in your group you will assign to enter the information into the spreadsheet. The numbers are automatically totaled into an annual amount and carried to the form, which you will simply copy onto the newsprint. Remember, the statement of income is for a specific period of time. Each quarter stands on its own. That's why the quarters must be added. Each quarter supplies part of the story. Are you tired of me saying story yet? All right, the next financial statement is the balance sheet. So if the profit and loss explains income and expenses, what's the balance sheet? And why do we need it? The statement of the balance sheet, is a picture of the financial position of the company at a particular point in time, as of this minute. The balance sheet shows everything the company owns and everything that it owes. In other words, all of its assets and all of its liabilities. The difference between the two is the company equity. What is equity? How many of you guys own a car? Okay, does anybody have loans on their car that they're paying? Couple? All right. Your car is worth $10,000 and your loan balance is $6,000. You have $4,000 equity in your car. The difference between what you own and what you owe. Now, one of your jobs will be to figure out how equity changes, because there's something that changes equity. Each line item or account or category reflects the net change to that item since the beginning of the company. Let me back up just 1 second. Things the company owns. It owns its cash. It owns its inventory. It owns its plant and other fixed assets. Things the company owes. We start off with the company owing on a loan, a business loan. All right, so as I said, each line item on that balance sheet reflects the net change to that item since the beginning of the company. So your cash account reflects every addition or deposit and every deduction since the day the account was opened. Your job will be to explain how and why those account balances changed during your tenure as management team. So as before, when you get your decisions from the prior quarterly input, not only do you want to review your sales and expenses and profits, or lack thereof, you also want to review the changes in the balances of your balance sheet and be able to explain why those changed. Here's an example. Now, it's called a balance sheet for a good reason. It must balance. The total assets must equal total liabilities plus equity. So if your balance sheet doesn't balance, you've got a problem you need to fix. As you'll see, this also has the percentage of change column, which you should be able to explain. The balance sheet is also part of your quarterly report, and you'll review it each time you get the reports back after your decisions. Now, if the balance sheet is the picture of the company at a particular moment in time, and if it is the net of all the transactions to date, what do we not have to do in order to prepare the annual balance sheet? Correct. Nothing to add together. Simply use the balance sheet from the fourth quarter of year 1 and the fourth quarter of year 2. But in order to tell the story, you will need to look at and analyze the balance sheet from each quarter. And as with the statement of profits retained, we have provided a spreadsheet to help you in the process. After entering the information from the fourth quarter of the first and the second years, it will populate to a properly formatted balance sheet. Again, you will simply copy. Same requirements apply. Newsprint, only black marker, print 2 to 3 inches in height, and the final project should look exactly like this. Now, don't get carried away because you're simply copying. You need to go back and review what you've copied and have a second person review what the reviewer reviewed. That's too many reviews. Transpositions happen. Line items get put on the wrong line. Make sure the information is correct. Make sure it adds. Have somebody take a calculator and add it just to double check the spreadsheet. I know, spreadsheets don't lie. Make sure it's correct. Nothing more embarrassing than being in front of your stockholders and discovering you have errors in your financials. Now, this is a lot of small print about how to use the spreadsheets. I'm not going to read it to you. The lettering's too small. I'm too old. So read this. I think most of you guys can probably handle entering information into a spreadsheet with no problem. Management discussion and analysis. It is not enough to simply show your financial statements. You must discuss and analyze. You must tell the story about those statements. In addition to discussing significant changes in your financials, you are also going to talk about other financial concepts. And no, liquidity does not refer to whether the company has an on-site swimming pool or not. Liquidity, the adequacy of cash. In order for a company to have long-term success, it must closely monitor two things. Profit. Where do you find profit? That's right, your statement of income and profits retained. And cash flow. How do you monitor cash flow? And no, I'm not going to tell you. Do your detective work. But talking about cash flow and liquidity is part of what the stockholders want to hear. Why? Because you can only pay dividends if you have enough cash to do it. And trust me, the stockholders are in it for the return on their investment. And there's many other reasons why liquidity is important. Liquidity refers to how much cash or near cash a company has on hand. Obviously, actual cash is the most liquid. Inventory must be sold before it can be converted to cash. You're in a cash crunch, you might drop your price and try to drive that inventory out of there. Fixed assets are the least liquid. It's not easy to sell a manufacturing plant. So the question to answer is, how liquid is the company? Did the company have to borrow money to simply continue operations? Borrowing funds to add to the plant is not a bad thing, but having to borrow money simply to meet payroll? Not so good. Remember, telling the story is the good, the bad, and especially the ugly. You're not looking to go in there and paint this rosy picture about how wonderful you are. You're wanting to go in there and tell the true story of your company. What you did, what you learned, and you know how we learn best? From our mistakes. And that's even true as old as I am. So don't be afraid to talk about what you did incorrectly. Capital resources. That's your fixed assets, your plant and equipment. How did you balance the needs of the plant? When and why did you choose to expand? How did you pay for the expansion? And why? Why did you choose this over that? Borrowing funds instead of using cash on hand. Can either of those concepts be easily explained with a graph? Think about it. The results of operations. When you present your financial statements, you will be talking about these items. This is the what, the why, and the result. When you are talking about any of these items or line items from the financials, you can determine if simply detailing the information while reviewing the financial statement, or if you can say this item will be explained later in the presentation and using some type of graphic to explain in detail. Trend analysis can often best be explained when viewed rather than talked about. Now, back to those financials. You don't want to go down through there and say, my cash started at this and ended at that. We can all read. You're going to explain. Over the course of the second year we were in business, our cash took a major hit because, I don't know, why? Because we didn't sell as much as we thought, or because we mismanaged our funds. You're going to tell the story and let your stockholders read what they need to read. Additional items you may want to detail. Did research and development significantly impact your sales or expenses? Why might you run the plan at less than 100%? Did you do it by choice or out of necessity? Did anything significant happen, either in the economy or within the company? Did your CEO and CFO elope and go to an island in the South Pacific and left you guys managing the company without them? Or maybe your company advisors went and took a nap the entire time. It could happen. Think about that and work that into your story. Forward-looking data. Where are you going from here? Now, you are only talking about years 1 and 2, but by the time you do your presentation, you have already completed your input sheets for the 4 quarters of the third year, and you've already received reports for 3 of those quarters. So you can realistically discuss where your company chose to go. Did you choose to increase operations? Did you add to the plant? If so, why? Did you terminate a salesperson? Did the company buy an island in the South Pacific and move the entire management team there? Do you see kind of a, Continue telling the story. That's what it's all about. More things to discuss. And remember, visualization is helpful. How did your stock price fluctuate? Is that change in relation to anything else? What about your earnings per share? How is that calculated? Why do stockholders care? Things to think about, things to learn. Did you have a dividend strategy? Yes, you do. What is it? Can you explain it? Was it consistent? Did it change? Why? What is the strategy? I am going to do this. excuse me, be able to explain these things and perhaps show these things if you can. There are many items that can be graphed, but the question is, should they? You can place more than one item on a graph, but is the comparison logical? Would I want to compare, I don't know, maybe advertising with overhead expenses? Do they have anything in common? So if I'm going to do a comparison graph, make sure the comparison makes sense. Pie charts are usually difficult to explain and they take a whole lot of ink. You may not want to do that. Bar and line graphs usually can easily show a concept. As long as the graphs are applicable, you can have as many as you want. You may want to have 2 or 3 that you're definitely going to use. Have a couple on hold in case you need field time. Now, the judges have time to ask you questions at the end of your presentation. This is not an attempt to trip you up, but they want to determine your level of understanding of the concepts we've learned during the week. Were you just saying words in your presentation, or did you really understand what you were talking about? How much research did you do so that you could better understand the relationships in the numbers? The more you understand the why, the better you will be able to answer the questions about what. Now, you've got all kinds of means to do research. You've got those handy-dandy little cell phones. You can hop on the internet and find out all sorts of things. You have your company advisors that you can ask questions to. Make sure your level of understanding is where it needs to be so that you can answer the questions. There's a standard set of questions they use. It can be anything from the presentation. And sometimes you may have already answered the questions during your management discussion and analysis. Company historian. This is a very, very, very important person. Remember hours and hours ago, I talked about recording what you were doing each quarter and recording the results of those decisions? Well, this is the person that will record that information. Actually, this is one of the most important people on the team. Now, all of you guys want to be CEOs because you think that's the most important person. Let me tell you, the company historian is the most important person on your team. When you are writing the scripts for this presentation, you will rely on the notes of the historian. You will not simply remember why you decided to add 6 people in quarter 3 of year 1, or why you decided to fire 5 of them in quarter 4 of year 1. Company historian. This is a quick look at how points are awarded for this presentation. Your financial statements, your management discussions, and the questions. And there's the possibility of bonus points. Do a really, really good job, bonus points can be awarded. Top 10 things to do. Everybody in your company must be involved in the presentation in some way. They may simply be holding a sign, holding a financial, holding a graph. 2 people can hold a graph. They might be the timer. You will want to have somebody sitting in the corner of the room using the stopwatch and telling you how much time you have used, how much time you have left. Slow down, speed up. You want the presentation to support your numbers. You want to use business vocabulary. You can read the rest of this. Main thing I want to tell you is start early and rehearse. Top 10 things not to do. Don't make up data. Companies and CEOs and top management get put in jail all the time for making stuff up. You don't want to do that. No, we won't put you in jail. But we will know. You've got to involve everybody. Let's move down to number 3. Rehearse past 10:45 p.m. Thursday night. We cut off Thursday evening at 10:45. At that point, everything revolving around the presentations must be put away, face down, under cover, not looked at, reviewed, or anything else until it is time for your presentation on Friday. Now, you may be thinking, well, why? I'm not going to present until noon on Friday. Why can't I work on this? Because another team has to present at 8 o'clock on Friday, and they don't get the benefit of that extra 4 hours that you would have by not presenting until 12. We want to make this fair for everybody. So everybody stops at 10:45 Thursday night. If you have anything on your phone, you clear it off. If you have any notes in your pocket or in your book bags, you take it out. It's all left in your company room. And it is not looked at until time to present. And I know the temptation is there. Oh, I'll just have it on my phone, my part of the presentation, and I'll just look at it. Nobody will see me, but somebody will. And it's not fair. So I ask all of you to pledge with me right now that at 10:45 on Thursday night, you'll put it away. Everybody agree? Great. And with that, I wish you good luck in your presentations, and I'm done. Thank you very much.